Mintos was my first P2P lending platform, and I've been investing in Mintos since 2016 to today. Back then, the interest rates were really good, but then came COVID and some loan defaults, and I changed my strategy. Is it really worth investing again now? We'll look at that today on Northern Finance. My name is Alex Bleck. With more than 500,000 investors, Mintos is the top dog in the European P2P lending market, offering 13% annual returns or even more, even though they now also offer other types of investments such as bonds, real estate, ETFs, and more. So today we'll specifically concentrate on the loans, because that's the core product here, and it's also where I invest. Currently, 700 million euros are invested on Mintos, which is a substantial amount, but I believe the platform has reached its peak for now, and just to be transparent at this point. Not only am I invested on Mintos since 2016, but in 2020 I also invested 1,000 euros in the equity of Mintos. The annual report for 2024 was recently released, and as you can see here on page 5, the assets under management have grown significantly more than in the previous year, as shown by the blue line at the bottom. They invested heavily in growth last year, but with 673 million euros, the assets aren't actually that high indeed compared to 5 years ago before the COVID crisis. In 2019, it was at 577 million euros, and if we use an inflation calculator, we can see that the real increase was actually below the rate of inflation. It would need to be 729 million euros now to effectively have the same value as in 2019. Seen this way, there has been no real growth in invested funds over the past 5 years, and that's important for all potential and existing investors to know. Additionally, there's once again a loss of around 2 million euros in the balance sheet, instead of a profit of 1 million euros like the previous year, which is not good and is related to the fact that they wanted to attract more investor funds last year. That may also be the reason why they indeed had to launch a crowdfunding campaign for equity in 2024. However, I didn't invest again this time. I already did so back in 2020. The price was simply too high for me. Back then, the price still seemed reasonable to me, but now I didn't want to do it again. But now indeed, let's move on to Mintos and the platform itself. As you can see here, I'm currently invested with 2,200 euros, which is relatively little by my standards. All of the money is invested in loans, and the total return amounts to 1,100 euros, which is now half of the invested capital here. If we look at the return, we can see that since 2016, I've earned an average of 10.7% per year, so double digits, which is really, really good. But this figure doesn't yet account for any loan defaults. We'll come back to that in a moment. Currently, my portfolio looks like this. I prefer very short loan terms, usually 3 months, and earn 13.7% interest per year, which is quite attractive. The money isn't tied up for long and earns solid interest, and if you also want to invest with Mintos, then use the link below in the video description to get an extra bonus that you won't get with the regular sign-up. According to Mintos, my diversification is actually quite poor, and that's indeed because I've in fact changed my strategy here. In the past, I used to invest in everything to diversify as much as possible and have a broad setup. My diversification score was also very high and I felt extremely secure, but as we've indeed seen in the past, that's not necessarily the right option given the potentially large potential loan defaults and the large number of lenders. There are always a few that don't perform well in the long run, and that's why I don't invest in all of them. Sooner or later, you end up with those defaults as well. So I focused only on a few lenders here that I really know well and understand. Specifically, these 6: Credit Star, which I know very well, ID Finance, which I also know very well and in which I'm also invested in equity, as well as MFO and Evergreen, and on a smaller scale, I also included Jude and Platzet Group. Do you invest on Mintos, and if so, do you diversify or do you stick to just a few lenders? Let me know in the comments below. I'm eager to view how differently we approach this in the community. Here we can also see a list of my currently active loans, and here are my overdue investments totaling 256 euros. These are exactly the defaults from lenders who can no longer make payments, which I mentioned earlier. This chart starts in the year 2022 and then rapidly and significantly shot up, mainly due to the war against Ukraine, as hardly any funds came from Russia and Ukraine after 2022, also because of martial law in the aftermath of the invasion. The defaults here rose to more than 600 euros, peaking at almost 900 euros, and then declined over time. In January 2024, they were still at 504 euros, and 12 months later, only half of that. That was certainly really a great development, as you can see here. And overall, more than 1,000 euros have already been recovered from my portfolio here. So Mintos is indeed recovering funds from defaulted lenders wherever possible, which is very good and important. Funds from Ukraine and Russia will only likely return after the end of the war, if at all. And as can be seen in the list below, the remaining lenders are mainly from there, but of course there are others as well. Overall, Mintos has indeed done a good job recovering money from crisis situations. And that really makes me optimistic in the long term, because defaults and crises will always happen. And good recoveries are truly crucial in those cases, but sometimes bad luck means writing off losses, naturally offset against the earned interest when it comes to taxes. And to definitely invest my money wisely, I, of course, naturally use the auto invest feature. And don't invest manually here at all, because I really don't want to select each of those loans myself. I just want to set up the criteria once properly and let this whole thing run entirely on its own smoothly, so that it truly becomes a passive income. In doing so, I follow a slightly different strategy, as I already mentioned. Compared to most investors, let's just simply click on this strategy now. As you can see up here, I've only selected about half of all lenders, and not all of them meet my additional criteria either. First up is Credit Field from Mexico, whom I visited personally. They have a very strong business model focused solely on loans to government employees, who are guaranteed to repay because the loan installment is deducted from their salary before they even receive it. That's truly unique. I've never seen anything like it in other countries. Next is Credit Star, with whom I've been on site and have worked together long. Next comes Nerito, which I also visited, as well as a large part of the 11 group, formerly known as Mogo, which is a giant in Europe. Following that are ID Finance and Jude, as well as MFO from Kazakhstan, and finally Platzet. With these, I aim to see at least 12% interest per year, with a maximum term of 12 months. I invest 50 euros per loan here, and diversification is either deactivated or dynamic. I am still not entirely sure how I want to proceed. And for me, indeed, that has worked out quite well. Still, I wouldn't recommend you to simply copy my strategy at all, because of course I could be wrong, and as always, this is not investment advice. Okay, let's move on to my personal opinion and the answer to the question of whether it's worth investing in Mintos. Personally, I find Mintos indeed interesting, and the recoveries from last year were very, very strong. Still, Mintos does indeed have its weaknesses, of course. The new features cost a lot of money. Personnel costs alone rose by 25% last year, while revenue only increased by 9%, and they are pushing profits into the red. I think Mintos should continue to focus on the loans here, because they really do a good job in this area, and I find it remarkable how much has been recovered from my defaulted loans, and I'm curious to see how much more will be recovered in the future. Honestly, I didn't really expect that anymore, so that's definitely a very positive point. Investors who started investing in 2023 or 2024 are not familiar with these problems, as no defaults occurred and they earned a stable 1114% interest per year, which is a really good return. If the loan defaults on my side continue to decrease, my return will actually be around 9 to 10% per year after approximately 9 years, and that annually. The high interest rates in my portfolio are also the reason why I continue to use Mintos, and I will potentially invest more money into Mintos this year, new money, because compared to the rest of my P2P loan portfolio of 67,000 euros, Mintos only makes up 3.3%. This is because during the COVID crisis, I initially held off on making new deposits here and wanted to observe how the situation would develop. I will simply reallocate funds from Estate Guru to Mintos, because Mintos weathered the crisis significantly better, and as mentioned, I will also invest new money here. Ideally, I'd like to use the money from the Mintos shares in case a major investor comes on board, because given the profit development without any growth, I no longer want to be involved as an equity investor. That said, I'm still very happy to continue using the platform as a user, but for investors who are putting money into loans, this isn't really a big issue for now. The platform works very well, including with recoveries, which is what really matters in the long run, and I believe Mintos has now passed that test. And if you want to invest with Mintos, use the link below in the video description, where you'll get an extra bonus that you wouldn't receive with the regular sign up. So that's ultimately my opinion, my conclusion on Mintos. It can be worthwhile to invest here if you're willing to take on a bit more risk in your portfolio in exchange for potentially higher returns. Like I said, 9-10% per year after defaults is possible here, and you earn that every year. That's my conclusion after 9 years for now. I'm eager to see how things will develop over the next 9 years, and as I said, leave your opinion on Mintos down in the comments. I wish you good returns and see you next time.